Police Scarlet Wall Street just made a $250 million bet that Solana is about to eat Ethereum's lunch in the tokenized finance game. And if you're still sleeping on what this means, you're about to miss the biggest institutional money migration since BlackRock launched their Bitcoin ETF. Here's what just happened. Securitize, one of the largest players bringing real-world assets on a blockchain, just expanded their $1.4 billion tokenized fund to Solana. At the exact same time, Ethena, a protocol managing over $5 billion in assets, announced they're allocating $250 million into this fund. This isn't some random crypto project. This is traditional finance infrastructure moving billions onto blockchain rails, and they're choosing Solana over Ethereum for a very specific reason. Let me break down what a tokenized CLO fund actually is, because this is where crypto meets Wall Street in the most powerful way. CLO stands for collateralized loan obligation. Think of it like this. Banks make hundreds of business loans, then bundle those loans together into one investment product that pays you interest. Traditionally, only mega-wealthy investors and institutions could access these deals because the minimum investment was millions of dollars. Now here's where tokenization changes everything. By putting these CLO funds on blockchain, Securitize can break them into smaller digital pieces, like slicing a pizza. Each token represents a share of that loan portfolio. Suddenly, instead of needing millions to invest, you could potentially access these institutional-grade investments with much smaller amounts. That's the democratization of finance actually happening in real time. But here's the part everyone's missing. Ethena choosing to put $250 million into this specific fund on Solana isn't random. Ethena runs a synthetic dollar protocol that generates yield. They need safe, stable places to park billions of dollars that generate real returns from the traditional financial system, not just crypto casino gambling. This CLO fund gives them exactly that. Loans to real businesses generating real interest payments, now accessible on-chain. Why Solana, though? Ethereum has been the king of DeFi and tokenized assets for years. Here's the truth that Ethereum maximalists don't want to admit. Solana is faster, cheaper, and when you're moving hundreds of millions in institutional money, those transaction costs and settlement speeds actually matter. Ethereum's gas fees can spike to $50 per transaction during network congestion. Solana? Fractions of a penny. When Securitize is managing $1.4 billion in assets, those savings add up to millions. This connects directly to the ISO 20022 banking revolution that's already underway. ISO 20022 is the new global messaging standard that banks are adopting for cross-border payments and settlements. Tokens like XRP and XLM are built to work within this system. What Securitize is doing with tokenized CLOs is the next layer. Not just moving money faster between banks, but moving actual investment products, bonds, and loans on a blockchain infrastructure that can talk to these ISO 20022 networks. The big banks aren't just testing this stuff anymore. They're deploying billions. When you see Securitize putting real loan portfolios on-chain and protocols like Ethena allocating massive capital to them, that's the bridge between traditional finance and crypto actually being built. Not in 5 years. Right now, here's what you need to watch next. First, Solana's price action as more institutional money flows into its ecosystem. Second, watch for other major protocols following Ethena's lead and allocating treasury funds into tokenized real-world assets instead of just holding stablecoins. Third, pay attention to whether Ethereum fights back with Layer 2 solutions that can compete on cost with Solana. The tokenization of everything isn't coming. It's here. Wall Street is choosing which blockchains win, and they're voting with billions of dollars. This is educational content only, not financial advice. Always do your own research before investing. But if you want to understand where institutional money is actually flowing while everyone else argues about meme coins, you're watching the right channel. Follow Stack Daily 60 for daily crypto and money tips.